Hi everybody, Joe Conroy with Hartford Retirement Planners. I hope everyone is doing well as we head into the holiday season and New Year's. If you're traveling, I hope you have safe travels. Hope everybody is safe and healthy. What I want to do with this video is talk a little bit about what happened in 2022, and then more importantly, let's look towards the future of the markets, your investments and portfolios, and Hartford Retirement Planners. So before we really get into that, I just want to make one quick mention of this is a very fun, joyous time for many people. However, for others, it could be a time where we've recently experienced a loss and it could be a difficult time. So our hearts and thoughts go out to those who are having a difficult time this holiday season. People are with us in spirit, even if they may not be here physically. 2022 was a very historically difficult year as an investor. Most of the folks watching this are probably getting ready for or in retirement, and your stock-based diversified portfolios, I don't have to tell you this, they had a tough time. At the lowest point, the S&P 500 stock index was 25% of a drop from where we were at the peak. NASDAQ, or more growth-based or technology-based, did even worse, all right? We've had a little bit of recovery. So as it sits recording this towards the end of December, somewhere between -18, -19% on the S&P, but still well off where we would like things to be. Most of those watching are very diversified investors, and part of a diversified portfolio is owning bonds or fixed income or some type of safer asset. Well, they let us down this year. Bonds at its worst, depending on what type of bonds you owned. Plain vanilla bonds were down 15% at some point, and they're still down double digits. What does that mean? There was nowhere to hide. You saw it in statements. We saw it on the news. That's what happens when the Fed increases interest rates at an unprecedented level. Analysts, right? We all should have seen this coming. Those who are economists and watching the market, well, nobody saw 7 rate hikes when the expectation was maybe 3. Inflation came on way stronger and faster than most, which required a more prompt and extreme strategy in order to deal with it. That's 2022. What do we look forward to next? Well, I remember making a video at the beginning of COVID where the market was dropping at a much faster and further rate than what we experienced this year. We talked about the Australia wildfires of 2019. All right, so some of you watching might think, I don't really remember that. Maybe this will jog your memory. There were wildfires throughout Australia. It burned down tons and tons of forests, and it was kind of devastating to put it mildly, to the environment. A year later, in those same spots where it looked like everything was, hell on earth, charred, everything, trees down, burnt, looks like nothing could survive there. A year later, all of a sudden, the floor came alive with growth. There was green coming up. And the only reason I bring that up now is because that story, I remember, helped a lot of the clients we worked with back then just feel like it's not going to be charred earth forever in the markets. There will be green shoots shooting out, and the forest is going to grow again and come back probably even stronger than what we had before. How can we be confident in that? Well, I'm sure you've heard me say it before. I'll say it one more time. We've had 26 bear markets, 20% drop or more, right? We had that this year. In the past 100 years, we've had 26 of them. All 26 not only recovered, but full recovery and hit new highs. So this is number 27. I feel confident that the recovery will happen. How long does it take? That's the next question. How long do we have to wait to get our portfolios back to where we were before? I can't guarantee you any answers, right? But if we look back at history, since 1929, the median return a year later from a bear market drop of 20%, median, of course, is half the times were worse, half the times were better, so split down the middle. The median positive return 12 months after a bear market is 24.3%. In that time frame. 3 years later, it's even better. It's over 35% positive 3 years after a bear market. Take those numbers with a grain of salt. What the point of that is that there are greener days ahead, and I think they're going to come here a lot quicker than most people give it credit for. I want to touch on bonds because I think they're confusing to a lot of people, so let's talk about what that market looks like as we have high interest rates. Could they go up a little bit more? Of course. How do we make sense of those losses? Well, going forward, if you own bonds inside your portfolio, whether it be mutual funds, ETFs, or directly held individual bonds, as they mature, not just like CDs, but CDs mature, you can take that cash, and if you have a portfolio, of course us managers will do that for you, and buy bonds at now the higher interest rate. So instead of your 2% yielding bond, now all of a sudden you get the cash when it matures and you go out in the market, you could buy a 4%, a 5%, or even more. Consolation prize of rising interest rates is that it actually is doing the job with inflation so far, which is a good thing. And savings, you actually can earn a little bit of something. If you look hard enough, a CD rate will pay you north of 4% right now if you look hard enough, all right? So if you have any questions about your portfolio, what the future holds, we'd be happy to talk you through it. We're super confident in what the future holds for the markets. The economy is a little different. We've heard recession, deep recession. The markets work a little bit independently, quite frankly, ahead of what the expectation for the economy. And we can make sense of that for you. So reach out to us, any of us advisors here at Hartford Retirement Planners, be happy to have that conversation. I'll end with a positive note. Hartford Retirement Planners, next year, March, hopefully, we'll be moving into our new office. We are super excited to show it off to everybody. It's going to be a super comfortable, convenient, open-air parking everywhere, easy to get to place for us to plan your financial futures. Yes, we can still do Zoom meetings. Just because we have a new office doesn't mean virtual's off the table. It just means we have a more comfortable place for those who are local and want to come in and see a comfortable environment and put things up and sit belly to belly across the table. So follow us on Facebook, LinkedIn, and YouTube. We share a lot of the updates. Right now our content as we go through construction looks like an HGTV channel. But we're very proud of what we're building, and we're very proud and excited to have everybody in and show it off. So that's why we here at Hartford Retirement Planners are excited for portfolios, the markets for the future, and our new office, excited to show that off. We hope you have a happy, healthy holidays, New Year's, and as always, thank you for watching.